right, what's up everyone? We're right here at 432 Park as always. It's a pretty nice night. Definitely can feel spring is just on the cusp here. Pretty eventful day, right? We're going to be talking about it all tonight. The mic volume is low. Hold on one second. Let's see what we got. Let's see. All right, what about now? I think we should be good. Sometimes, the old microphone can kind of rattle around in my book bag during the day. So I just had to quickly reset it. Maybe it's a little bit better. Anyway, big day on Wall Street for earnings. We had Nvidia reporting earnings today. Pretty interesting report, might I add. And then we also had Salesforce and Mark Benioff. Continue to see a lot of downside pressure in a lot of stocks and in crypto markets, which has been creating a lot of really good opportunity. This is Park Avenue, 56th Street. Looking over at 425 Park. Now we did finally get some color on chip revenue specifically from Blackwell chips, which was interesting. Now there were some business segments, I should say, in Nvidia that were slowing, particularly gaming. The gaming business is kind of decelerating. Year over year, I believe sales were down a little bit over 10%. I think maybe like 11 or 12%. But pretty impressive report nonetheless, might I add. And I think they announced a dividend. Think of like a penny, I believe. I think this was after the report. Anyway, we'll get started in a minute. It's good to see everybody. Let's do the quick audio visual check. If you guys can hear us. And if we're streaming in 1080p, we'll get started in a moment. Now, Salesforce did guide a little bit low, a little bit disappointing guidance from Salesforce, but interesting report nonetheless. We'll talk about it tonight. Rich says, why do you never broadcast from Boston? Very beautiful, big, well-functioned, cleaned, smart city. Yeah, let me go ahead and jump on the Amtrak real quick and do a quick stream from Boston when I get done from work. I think maybe we'll start to do that So maybe we'll start to do that tomorrow. We'll start to do the streams from Boston. I'll do the 8-hour commute per day. Anyway, good evening, everybody. Welcome back to Walks on Wall Street. It is a beautiful night here in New York City, and it was a big day on Wall Street. Lots of volatility, particularly in the crypto markets. Bitcoin is now corrected down to the 200-day moving average. But I think the biggest topic of the night is both Nvidia and Salesforce. Now, pretty impressive earnings. We got a lot of color from Jensen, particularly on, I should say, really the whole, DeepSeek. I guess you could really call it an issue, right? The biggest thing with DeepSeek is that many analysts on Wall Street are projecting or predicting, assuming that DeepSeek's claims are correct, that they spent about $6 million to develop their AI, that all of these other hyperscaler businesses and AI companies will no longer need to spend an enormous amount of money in CapEx to build their AI models, products, and services. However, it seems like, at least the messaging from Jensen and team, seems to be quite the opposite. Now, the new product line at Nvidia is the Blackwell chips. That is kind of the next step from their Hopper AI product. And I believe revenue alone from their Blackwell chip segment came in right at $11 billion. I wrote down a little bit of an excerpt from the earnings report. Jensen said, and I'll kind of paraphrase here, he says they're saying that demand for Blackwell is quote-unquote amazing, and they're calling it the fastest product ramp in company history. So it is growing. The demand is enormous. Obviously, the number one customers of Nvidia are the big hyperscalers, right? You think about Meta, you think about Amazon, all the big cloud providers, AWS, Azure, and the like. And it seems like they coughed up a pretty penny and bought a lot of chips this quarter. Now, another concern, which we've addressed over the past, 2 to 3 live streams, is that a lot of the big hyperscaler businesses are starting to take some of the chip design and production in-house, partnering with companies such as Broadcom and Marvell Technologies. But those are really the ASICs chips, right? Application-specific products, so to speak. That question was asked specifically to Jensen. He kind of played it down and just said the demand is huge going forward. Now, there was another business segment that's really not talked about too much, obviously because everybody is so focused on the data center business. The data center business, I don't know what's going on here, but I think the data center business now accounts for well over 90% of total company revenue. I think it may be north of 95%, but the business in motor vehicles, right, cars and robotics, that business is growing north of 100%. So the cars and robotics business had about $570 million worth of revenue, up 103% year over year, which is pretty significant. And I think that business will only continue to grow. Now, there was a business segment that was actually in decline, and that was the gaming part of the business. Overall, I thought it was a pretty solid report. It's kind of just wild to think about some of the numbers and just how Nvidia is still growing as fast as they are. Obviously, as a company grows to multi-billion dollars in revenue, as Nvidia has, you're going to have decelerating earnings and decelerating sales, right? So total revenue for Nvidia came in just under $40 billion. $39.3 billion. That was an increase of 78%. Earnings also beat at about 89 cents. Now, net income, which is total profitability, also is up $22.09 billion. So $22 billion to make in the quarter is pretty significant and very, very impressive. And what's even more impressive, even though gross margins went down in the quarter, Nvidia's gross margins are 73%. I'll say that again. Nvidia's gross margins are 73%. I mean, that's just a cash cow of a business. And that is with, I think, about a 2-point reduction in margins. I believe an analyst went on the call and was kind of asking some prodding and poking questions about why margins decelerated a little bit. And it's mainly due to the Blackwell chip production and their next generation chip production, which is going to be a little bit more complex and capital intensive, but overall still solid. So just a very, very impressive company. Not too much movement in the stock price though after hours. But yeah, that's what we got for Nvidia. Now Mark Benioff, kind of shifting gears to enterprise software, Salesforce, ticker symbol CRM. They also own Slack and the like. They had a pretty good earnings quarter. However, they did miss slightly on revenue estimates. And the guide was just a little bit weak. So Salesforce brought in about $2.78 worth of EPS, and revenue came in at just over $10 billion. Net income for Salesforce came in at $1.71 billion. Now, just for fun, I just want you to kind of compare those two numbers for a second. So Nvidia's revenue was $39 billion, and they made about $22.09 billion. But Salesforce had $10 billion worth of revenue with about $2 billion worth of net income there. So pretty interesting. Just to kind of gauge where gross margins are, right? And a fun kind of note from the earnings call is that apparently the Department of Government Efficiency, or DOGE, is powered by Slack. Pretty interesting. All right, let's see who we have in the chat tonight. Hopefully you all are doing well. It is officially the middle of the week, and it was a long day, but a successful day. But I'm a little bit tired tonight. It was a very, very long day. Very busy, but busy is good. Can't complain. God bless everybody. Professor Dario is here. Welcome to New York. We're standing right outside the beautiful Plaza Hotel here. Noah, what's going on? Good to see you, sir. Hopefully we can meet up next week or something. It's just kind of the day got away from me today. Hopefully you're doing well, and congratulations on all of your success. And wish you much more. Teresa Diaz, what's going on? Al Baker, Bobby B, Fahim is here, Mohammed, Vincent 23, Christian, good to see you. There was a big event tonight, Harry Mackallow's event at One Wall Street, which was pretty interesting. Dennis Kim's here. What's going on, Dennis? Peter says you still must have a little bit of jet lag, a tiny bit of jet lag. ETC33, what's going on? Now, I think there's going to be a lot of big opportunity here. Well, there already is. A few days ago, we kind of were calling out a lot of these distribution days stacking up on both the S&P and the NASDAQ. We now have, I think, 8 on the NASDAQ and about 6 on the S&P 500. If you look under the hood of the market, the vast majority of stocks in the S&P are well below the 50-day, particularly a lot of the TMLs, right? The ones that we always talk about and focus on. The ones that really have gone up the most, so to speak, during this bull run are now kind of pulling back and correcting. And if you take it sector by sector, you'll see there's really been no industry that's really been spared. Yeah, you've had kind of a rally in, companies like Church & Dwight, which we spoke about, waste management, and a lot of the tobacco stocks, like Philip Morris, I think hit a new 52-week high again, all-time record high. So you're kind of seeing this risk off, right, out of big tech, out of the major hyperscalers, semiconductor businesses, and the like, and a rotation to safety. It's a big safety trade. The bond market continues to get a really, really nice bid here, which has been driving rates down. So interest rates have been coming down. The yield on the 10-year has been coming down, which is good, depending on how you look at it. That should help potentially spur activity in the housing market as, a lot of products are priced off of the 10-year U.S. Treasury yield. And we're actually seeing a little bit of a weaker dollar, which, if you think about the people who are in this administration that are around the Trump administration, right? Bessent, Howard Lutnick, and the like, Trump has said repeatedly that he wants a weaker dollar. We've been in probably one of the strongest bull markets for the US dollar in recent history, which is a little bit funny because you read these articles, you watch these videos, and the narrative really over the last 5 years has been the US dollar is going to go to zero. We'll let this guy freak out and go up a little bit. That the US dollar is going to go to zero, that nations want to try to move away from the US dollar, dethroning the US dollar as the world's reserve currency, and that we're going to have hyperinflation. But we've really been kind of seeing the exact opposite, right? We've been seeing unreal strength in the US dollar. The world can't get enough of dollars, and versus a basket of other foreign currencies. If you kind of think about just consumer habits, consumer spending, and things like that, Americans, it was a really good time to go on, like a winter break, overseas, because the dollar was extremely, extremely strong, particularly against a lot of Asian currencies, like the Korean won. They had like a mini flash crash fallout due to their, I should say, political instability, particularly at a time when I think their president is currently under arrest, as well as a very, very brief touch of martial law in there. We got to throw that in there. So we'll watch that. I think that is one to watch. Watch how these market mechanics move, and let's see how much cash continues to move into the debt market. We'll see. Now, one thing that is potentially a positive as the US dollar does come down, assuming it does correct substantially, that would make us a lot more competitive to the rest of the world, so to speak, and could potentially bolster or increase foreign investment into the United States. It's funny because, and maybe this kind of all plays into one another, right? We talked about how the EB-5 visa program is going to be ripped and replaced with something called the gold card. I believe the Trump administration is proposing to sell these gold cards for roughly $5 million. The projection, I think, and don't quote me on this, but I believe the projection from the administration is that they're probably going to sell about 1 million of these cards. I doubt it. I mean, 1 million's a lot. Like, I was just kind of conceptualizing this. I think Trump sent out like a tweet on Truth Social, that social media platform that nobody uses. That's not a knock at Trump. I wasn't trying to be nasty. Maybe I'm just a little bit tired, but it's true. I don't use Truth Social. I follow the Trump account that retweets on X the Truth Social stuff. Anyway, he said maybe they could sell 5 million. That's a lot. I'm not too sure that there's even that many people globally that could afford that. But anyway, I digress. I actually think it's a very good idea. One of the things that the Commerce Secretary, Howard Lutnick, kind of reinforced to reduce some of the fraud, because again, the EB-5 system, if anybody's familiar with an EB-5 visa process or a program, the stigma around it is there was a lot of fraud in that system, and there was. With this, there's going to be extensive vetting of these individuals, and assuming that there is the extensive vetting and we get qualified, ethical candidates, so to speak, to come to the United States, invest a bunch of money here, grow businesses and the like, I think that's a positive. And this is happening at a time when potentially we may have a cycle bear for the US dollar that could potentially last maybe a year or so. We'll see. Anybody have any thoughts on that? I know there's a lot of moving parts, and the way I think about it, looking at the big picture of the economy here, in terms of markets, right, in terms of the prices of valuations of equities and the like, I think the first maybe year and a half of the Trump presidency, you're going to see a lot of the turbulence that is caused by all these major changes, which should present unreal opportunities for us. If you thought the current bull market that we're in is powerful, which it is, it's one of the most unbelievable markets that I've ever traded through. From really 2022 up until now, I mean, the market has just been up and to the right, which has lifted a lot of these tech stocks. I think if we get a good correction, especially in the indices, right? If you get a 15 to 20% pullback in the indices, which I don't think we'll get, but that's a deep pullback. That means a lot of the individual names are going to get hammered, 70+%. That would be very similar to what we got in 2021, which set us up for one of the strongest bull markets in history. So I don't know if it's going to go that deep, but if it does, it's like get ready, because it is going to be opportunity galore. Larry Adams, what's up? Welcome to New York City. This is a pretty interesting shot of Trump Tower, and in the background, you have that 432 Park Avenue, which is the Mackalow Properties building. 13 is here, what's going on? Cycle Trade is here, what's going on? Since I've been trading full-time since 2002, and yes, strongest and the best is now for sure, right? Like absolutely for sure. And many people who've traded through the dot-com bubble, obviously I haven't, right? I was like, 4 or 5 when that was going on. But there's a lot of doomers, as I like to call them, that try to draw resemblances and similarities between the bull market we have now and kind of the mania phase of that 2000 tech telecom boom. I don't really think it's appropriate to compare the two. I mean, just based on the earnings power alone, a lot of if you do a comparative analysis by market capitalization, the 2000 dot-com kind of boom and bust kind of just didn't. There was in terms of overall market cap declines, the bear market when we had that big blow off top in 2021 through 2022 was more severe. If you look under the hood of the market, and I know I always say that, but in terms of a lot of the high beta, software names like the SaaS names, right? Think about the ARK Innovative ETF. That had an 80% drawdown. That was much, much worse carnage than the tech wreck of 2000. And what's different this time, which that's a very old saying on Wall Street, it's never different this time. These stocks are earnings powerhouses, right? If you haven't owned, Alphabet, right? Google, Microsoft, Amazon, all the major hyperscalers like Meta, People say, oh, they're overvalued, they're expensive, and they're frothy. Well, an example for tonight, like Nvidia, right? What was it, 76%, 75% gross margins, right around there, making about $22 billion a quarter. A company like that, their stock is never going to trade at a when it's in a bull market. It's never going to trade for cheap, right? You're never going to get an Nvidia, right? Like at face value. You're just not. These companies trade high octane, high valuation most of the time, particularly during their most powerful parabolic run-ups. That is for sure. Susanna Q4, good to see you. Thanks for joining us. This is the Hilton Hotel, ticker symbol HLT. Scott Solomon, welcome. This is a pretty interesting view of the Steinway Tower, 111 West 57th Street. Peter, what's going on from Tennessee? Hopefully you're well. This is a 49 PE for Nvidia is one thing, but a 500 PE for Palantir is crazy. And it's not just Palantir, it's a lot of the other stocks. There's a few names like AppLovin that have been crazy. Just look at how some of the valuations in terms of price to sales, price to earnings were stretched right at the very, very fever pitch of 2021. I mean, that was like peak crazy land. Now, I've said this before, and I think many of you also echoed this, but you'll know when we kind of have another 2021 style top, when we have an unbelievable amount of new IPOs coming public to the market. Kind of like what we had in 2021, when you had all the new IPOs, the companies were just terrible companies. And then you had the grifters that were throwing around all these special purpose acquisition companies, which were mostly frauds. Hey, Michaela, what's going on? We're adjacent from UBS. Alan, what's up? Yeah, Christian SPAC mania. Robert says Warren Buffett is 94 years old. Anyone have a chance to read the shareholder letter? Now, Berkshire has a tremendous amount of cash. I think record amounts of cash. They've never had more cash on the balance sheet. And it was interesting reading through that because Warren Buffett kind of tried to reiterate multiple times how they really try to stay invested. Did anybody notice that? They're like, we prefer equity. We prefer U.S. stocks. We prefer to have the vast majority of our funds deployed. And they do, by the way. It's just, Buffett is a value investor. And things aren't particularly cheap for a value investor to make new positions. What is encouraging is if we get a sizable correction here, think about really all the firepower that's on the sidelines. Yeah, we could talk about, money markets and things like that, which is true to talk about. But there's also a lot of institutional firepower on the sidelines and a lot of demand from abroad, a lot of foreign demand too, from sovereigns and the like. Quinn says, Tom, do you support public education? I do not support public education. I hope public education is disbanded, and I hope we ban all books. Sally, thanks for joining us. This is a beautiful shot of Radio City Music Hall. Who Dat Dave, welcome. Hey, Carl Roth, cheers. Good to see you. Now, for those of you who just joined, it was a pretty big day for Nvidia, so I guess we'll just quickly review the numbers again. Specifically for their new product set, right, the Blackwell chips. That was what everybody was really trying to pay attention to. And they posted about $11 billion in Blackwell revenue. Jensen came on the call and said, and I quote, "Demand is amazing," and he called it the fastest growing products campaign in company history for Nvidia. Now, if you think about its prior product set, right, the Hopper AI chips, Blackwell and the like, that comes from the data center unit or the data center division of the company. And that makes up about 91% of total sales, which is pretty crazy to think about. And it's also a concern a little bit for some investors. Investors like a diversity in revenue streams. And if you're super dependent on the big hyperscalers, right, like kind of what we reviewed, if 91% of your revenue comes from Meta, Amazon, Microsoft, et cetera, that can make, investors a little bit uneasy, particularly as we reviewed in terms of the ASICs chips. A lot of those hyperscalers are choosing to take a lot of this production in-house, partnering with those companies like Broadcom, Marvell Technologies, and the like. But according to Jensen, the demand is, to use his word, amazing. Demand is very, very robust. And he kind of downplayed the whole muddy-watered situation with DeepSeek. Now, as we reviewed a little bit earlier, it wasn't all growth. There were some specific segments of the business in terms of revenue growth that actually declined. And that was the gaming business. They reported about $2.5 billion in sales for gaming. That was down about 11% year over year. But the fastest growing segment of the business is cars and robotics. It's very small, right? $570 million worth of revenue. Pretty big by anybody's standard, but for Nvidia, if you compare it to the data center division, pretty small, right? 570 million, but that's up 103%. So that is a major, major growth driver for Nvidia, I think, over the long term as well. So overall, great quarter, right? They made about $22 billion, 73% gross margins. That's a crazy profitable business. Carl Roth says, "Tom, the new Blackwell chips are going to revolutionize the PC market in an amazing way. I can hardly wait until I can get this on a PC so I can go out." Oh, nice. Very cool. Very, very cool. Speaking of PCs, I think we have Michael Dell. We're going to hear from Michael Dell and Company tomorrow, ticker symbol DELL. I'm not too sure if HP reported already or maybe HP reports tomorrow, but that is a company I am very interested to see how they report. Because Dell, you kind of get two exposures there, right? Dell is huge in data center, but also personal computing as well. So we're going to see if this upgrade cycle, right, this pull forward, a lot of people have gotten intoxicated by AI talk, right? They want to be able to use AI on their personal cell phones, right? That's why we kind of have this alleged new upgrade cycle for Apple. We'll see. But same thing could be said for personal computers. Also, as kind of Windows 10 winds down. So it'll be interesting to see what we get out of Dell. Michael Dell is a really good follow on X, by the way. He always shares a lot of helpful information, and he's also kind of funny. Hey Mark, what's up? This is the iPhone 16 Pro Max, uses AI for Zoom. Yeah, the Apple AI or Apple Intelligence, right? I honestly haven't had much time to play around with Apple AI, Apple Intelligence, but Tim Cook did just launch a new product set. What is it, the iPhone 16e? That's going to be replacing the SE product set. Now on 46th Street. JC says, Tom, I'm disappointed that the iPhone 16e doesn't have MagSafe. Wow. Stephen F says, man, it's been too long since I've watched the walks, Tom. Great to be here now. It's great to have you. Hopefully you're doing well. Hopefully you've had a phenomenal winter. The spring is just around the corner. We also have other news. I don't think we talked about this, but Citadel, our good friend Ken Griffin, is getting in the market-making business in cryptocurrencies and Bitcoin, which is unbelievably huge. That is unbelievably huge. That is going to be an unbelievable business for Citadel. And if there's one thing that is guaranteed, and I was hesitant to use the term guaranteed, but I'm going to use it. Ken Griffin is probably one of the best decision makers of our time in the financial world. And I'll tell you a quick story about Ken Griffin. Now, when Enron, I'm not sure who here is old enough to remember Enron. When Enron went under, right, that whole big fiasco. Oh, what kind of car is this? Oh wow, it's a Prius? That actually looks really nice. That must be the brand new Prius. I actually like that a lot. I'm gonna have to do some research into that. The design was cool. Yeah, Bobby B, the new Prius looks great, right? Holy crap, talk about a total design change. That thing looks great. IPDS is the Prius Prime. Thanks for telling me that. I will have to look that up. The thing looks pretty cool. Anyway, so when Enron went bust, Ken Griffin and Citadel made it a point, the top priority, to interview everybody at the energy trading desk at Enron. Interview everybody. They flew people out, put them up in hotels. Ken Griffin was flying around the country to come to, obviously, ex-employees of Enron. And they interviewed pretty much every single person at the company. Now, they didn't really hire many people. I think they hired a few. They hired like the best of the best. But they really didn't do it to conduct interviews. Many of you may be thinking, well, maybe they just wanted to do it to, hire away all the talent now that everybody's out of a job. No, they wanted to reverse engineer what went wrong and get as much intel as possible into the desk and the operations over there, so they can go into that business, recreate the business, and do it that much better. So Citadel is an unbelievably profitable business, both the hedge fund business and the market making business. So when they make a decision to enter a market, they don't make those decisions lightly, okay? You can rest assured that they've done all of the diligence. So reviewing an asymmetric trade, I think the space, right, Bitcoin, crypto, and the like, is probably something that, now can't give out any advice, but I'm just kind of making an analogy. probably something that you want to have at least some exposure to, right? This is Bank of America Tower. Speaking of crypto, we heard from the CEO of this company right here, Brian Moynihan. And I believe they are developing some sort of a digitalized dollar. That's where everything is going. Everything is going digital. Money is already digital. We've spoken about this before too. Most people who are petrified of, a digital currency, a digital dollar, because they think, the government could shut you down or track you or debank you. Two things. Number one, they could already do that now. They could do that for like 20 years now. If the government really wanted to just turn you off as a person, they could do it in 10 seconds. That's number one. Number two is humans are always abrasive towards a new technology until they have a forced capitulation to adapt to the technology, right? And I'm not trying to say this in a mean way, but kind of do a post-analysis of your life, right? Now, I'm exactly like 29. I'm going to be 30 in May. And when I was growing up, when I went to high school, everybody had a smartphone, right? It was like the normal thing. Nobody even thought twice about it. But, you would visit your grandparents and things like that. And I remember a time where, the older generations were like, I don't want the smartphone. I don't want to be out there. I don't want to be on the internet. I want nothing to do with it. Right? It's almost like they were petrified of it. Now, every single person, right, at least that I know in my life, that's over the age of 75 and 80, they have a smartphone, they have an iPhone, and they know how to use it. And it's a beautiful thing. Like they know how to navigate the web. They know how to, send text. I remember like sitting down with my grandmother, like forcing her. I'm like, no, you got to learn how to use iMessage. You got to learn how to use the iPhone. You got to learn how to surf the internet. And they were just very, very hesitant to do it. And now everybody does it. It's the same thing with new technologies. Same thing with AI. Same thing with digital currency. So you always want to try to lean in to innovation, especially when it feels very uncomfortable to do so. Because that's when there's most of the alpha in the trade, right? To get exposure to Bitcoin in 2016, it was a little crazy, but that's when there was the most of the alpha in it, right? It seems nuts. You don't really know what it is. It could work. Maybe it probably won't. But that's when you have the most asymmetry, right? As adoption grows and as everybody starts to agree on the trade, well, the probability and the likelihood for you to generate alpha declines over time. You get the biggest payoffs when you try to be an early adopter. But the good thing is, right, if there's any venture investors here, the beauty of being able to adopt something early is you don't need to take that big of a risk. Right, there was people that wrote, very, very teeny $50K venture checks for Uber that are now worth hundreds of millions of dollars, right? So you don't have to take a big risk. You don't have to put all your money into it. You can just get some exposure, and if it goes down, if it goes to zero, it's a rounding error in your portfolio. But if it works out and it pays off, well, that could then one day become, an 80% position in your portfolio. Anyway, we're here at Bryant Park. One Vanderbilt looks great tonight. We're overlooking the Winter Village here in New York City, as well as the Steven Schwartzman building. I remember just 3 weeks ago, this whole fountain was frozen. Hey, what's up, Stephen Long? Says, hey, Tom, I'm a technology angel investor and spread my money over SaaS, biotech, and clean tech startups. Seed and Series 1 money. Wow. Very cool. Now, I'm very interested in biotech, but I'm not really smart enough to understand it. But if I had to bet, particularly with like CRISPR gene editing technology. I think the vast majority of the alpha that's going to be generated in startups is probably going to come from biotech. What really resonates with me the most, I'd say what made the biggest impression on me so far through this, I would say, post-inauguration, is when you had Larry Ellison of Oracle with Masa's son, right? Masayoshi's son is SoftBank. Talk about, and I think this was Larry Ellison that said it specifically, that we're going to be, in our lifetime, we're going to be able to use AI, artificial intelligence, to come up with a vaccine for cancer. Or technologies where we could actually go in and edit your genes and edit away the sickness, edit away the cancers. And that's a real thing. But biotech is a very, very, you really need expertise, right? And in the investment business, oftentimes the greatest investors have a background in something other than investments. Maybe they, like look at Bill Gates, for example, right? Gates' family office is extremely, extremely successful. Bill Gates didn't grow up working on Wall Street, right? He was a tech guy. But when you know and you have an expertise in something, you have an edge, right? So you can become, the greatest tech investor ever. So maybe you are, you have a degree in biotech or biology or whatever, right? You worked at a big biotech company. You know what works and what doesn't work, right? You're familiar with the space. Particularly biotech, it's very hard to kind of be an autodidact in that industry. There's some people who have, but that's really, you need like a mastery, at least for me. So anybody who has biotech in their background, I think you're going to do really, really well in the investment business over the next decade. You can see a little bit of the World Trade Center in the back. Hey, Hang with Mark Mom, what's going on? Good to see you. Robert V says this is an ARC G bag holder. I hope you're right. What is that? Is that the biotech ETF for ARC? Now, there's one thing I'll say about Cathie Wood, and maybe some of you would disagree, but I think ARC produces the best research of really anyone on the street. And I stand by that. Risk management, by the way, probably one of the worst. It is highly, highly possible that Cathie Wood and ARC are proved to be correct on many of their investments, but they're just at the wrong time, right? If you're running an actively managed fund, you can't afford to have your clients, ride stocks down 80, 90%. But it's very possible that she will be proved correct. She was just way, way too early. If you go on ARC's website, they have a lot of good articles. They also have a Apple podcast, which is pretty good, which is more than pretty good, very good. So that's kind of my opinions on Cathie Wood. I think she does equity research better than pretty much anybody on Wall Street. Seriously, her and her team. But as a risk manager, it's like pretty, you got to blow these positions out when they start going against you, right? You can't ride these things down 90%. Now, another investor that I really, really look up to, who I've studied pretty much over my entire investing career, is Ron Barron of the Barron Funds. If you are more of a growth stock, investor, so to speak. I think you would really kind of vibe well with the Barron funds and Ron Barron. They're located right here in New York. I would say the most famous trade or the famous investment that Ron Barron made, he was very, very early in Tesla. Very, very early. He was one of the first people to really believe in the vision at Tesla. Check out their website. What I would also do, go back and they record all of their shareholder meetings, the annual shareholder meetings, the Barron funds, every year they put it up on YouTube. The previous year, 2024, they hosted it at Lincoln Center, and they had a big Cybertruck right in the fountain at Lincoln Center. It was pretty cool. That is a great keynote speech. So if you go on YouTube and you just type Ron Barron keynote 2024, I think it's about 45 minutes. It's really amazing. Really, really amazing presentation. Hey, Top Cat, good to see you. Elliott Wave Review says, Tom, where do you see Bitcoin bottoming at? Well, we're sitting right at the 200 day. We should have some sort of a bounce here, because this has been a very, very big flush kind of to the 200. But the exact number where it'll bottom, I don't know. I do not know. But we're at the 200 right now. We are at the 200 day, quite literally, as we speak. Anyway, if you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these lives pretty much every day, starting around 8:45, 8:30, 8:45. Now, for some interesting context, I remember the first time looking at my computer screen when Bitcoin broke over $1,000 for the first time and corrected. And then I remember the $5,000 for the first time. I think the most vivid memory where it was like craziness was the peak in 2017. That was probably the most just stupid market I've ever seen in my life, when Bitcoin topped just a hair under $20,000, and I think bottomed at around 4,000, something like that. So to think, just in the time that I've been involved in the space, that we have a correction from 108,000 down to what, 80? We got down to what, 80,000 today? 82,000? Those were the kind of memes we were posting back in 2016, 2017, right? We were posting those memes on Facebook at the time. I don't think anybody uses Facebook now. But I remember posting those memes on Facebook like, it'll be the year 2030. And the headline will be Bitcoin crashes from 100,000 all the way down to $75,000, right? Because at the time, Bitcoin was like a few thousand bucks. And now that meme is literally a reality, which is kind of mind-bending. And I think the meme still rings true. I think you'll, so long as I keep doing these live streams, 10 years from now, 5 years from now, we'll be saying, oof, man, Bitcoin really tanked 14% in a day. Because I think it was down like 14% today. We'll be saying, whoa, what a monster move. We went from 600,000, almost $100,000 drop down to $500,000. I mean, just think about the U.S. equity market for a moment, right? Many of you probably lived through, in prime working age, the 2008 financial crisis, right? Watching futures every night, you're kind of like, wait, the S&P's down how much? The NASDAQ is down how much? And now look where the NASDAQ is now. Look where the S&P 500 is now. It's really insane, right? Did anybody ever think in their lifetime they would see the S&P 500 at 6,000, right? Round number 5,000, 6,000. It's going to be at 10,000 within my lifetime, right? It's kind of crazy to see the growth, right? Speaking about stocks, I mean, the growth of the U.S. economy, it's been explosive growth. Kevin says, well, us old people still use Facebook for Facebook Marketplace to find good deals on stuff. That's actually, it's funny that you mentioned that. I was just about to re-download Facebook for that exact reason, for the Facebook Marketplace. I want to try to get a specific piece of furniture, and I was watching a few YouTube videos, and there's a whole community of people that can score really amazing deals on Facebook Marketplace, particularly in Manhattan. Some of these people will rent a $20,000 apartment, furnish all of it, and then, they spend like $10,000 on a couch, and they just want somebody to come and pick it up and flip it. So if I can I'm looking for a specific type of chair I want to put in my new place that I just got. But if you look at the demographic shift, Facebook at one point started off as all college kids, right? And then that kind of migrated to the college kids on Instagram and Twitter. And now the people on Facebook, it's a predominantly more mature audience. It's an older crowd. That's not a bad thing. I'm just saying that's kind of how the demographics has shifted, so to speak. Increased naturally. It says, hey Tom, you think these golden cards for $5 million will spark greater demand for real estate in New York City? Yes, under a few specific circumstances. And we had our morning meeting today at the office, and my boss was kind of talking about this. This is one of the things I brought up in the meeting. If you have a few factors aligning, because a lot of our clients are international, and we've been showing them properties. It's usually we're showing their people properties, right? Their people will fly in, and then we'll take them out and things like that. It's really been a currency issue. That's been one of the main reasons why a lot of our foreign clients haven't yet pulled the trigger on some of the big trophy properties in New York. A lot of the buyers have been domestic for these monstrous trophy properties. Not all of them, but a lot. Prime example, we just had a record deal close at 740 Park Avenue. That's the Jackie Kennedy building. Ken Griffin spent $45 million on I think David Koch's old apartment, the duplex. Bought it from his wife. In any event, should the US dollar come down here, the answer is absolutely 100% yes, right? Howard Lutnick, he's a deal maker, right? Former CEO of Cantor Fitzgerald, now is, kids are taking over the business, obviously, right? But that guy knows how to deal, and he's the one who kind of gave the whole spiel about the gold cards, so to speak. $5 million, and then you get, I think, permanent residency here, and then later maybe they'll hash out the details to become a citizen. That is huge. Next 4 years of the Trump presidency with this kind of gold card, slinging citizenship for $5 million, I would say 100% yes, 1,000% yes. That will spur activity in the luxury real estate market, not only in New York City, but in major cities like San Francisco. I think you're going to see a lot of buying there. LA. I mean, what do you think? Do you think it will, do you think this gold card thing will be a net positive or a net negative? What are your thoughts? Hang with Mark Mom says it's a great idea. That's kind of how I feel too, because the EB5 system was really broken. And assuming, right, that's the big if, assuming they do the appropriate vetting, then I think it's a good idea, because there are a lot of bad actors around the world, right? We can't deny that. So we don't want like foreign adversaries, sponsoring people, giving them $5 million so they could do like backdoor espionage in the United States or terrorism or whatever. So assuming that the vetting is done correctly, which, Howard Lutnick really hammered on that. He said there's going to be a very extensive vetting process. Then I think it'll be good. Peter says, do these gold card folks want to be taxed on their worldwide income if they become U.S. citizens? Taxation here is not territorial, but based on citizenship. Well, I don't know exactly if they need to become citizens. Maybe it's just they get a green card or permanent residency. Because there's actually a lot of immigrants that don't want to become U.S. citizens for a whole myriad of reasons, right? Maybe tax reasons. So maybe it's just a permanent resident. I don't know. It's a good question. It's a really good question. I just don't know. Looks like something's getting out of Penn Station here. Hang with Mark Mom says many who are wealthy have dual citizenship, for sure. Hey, Kevin says, Tom, have you ever thought about live streaming on Twitch along with YouTube? So I have thought about it, but I've decided against it for a few reasons. One of which, I don't know how I would read the comments on both platforms at the same time. That's number one. But number two, anecdotally, right, and this is just maybe a stereotype, there's a lot of degeneracy on the other streaming platforms. Just from what I observe, maybe I'm wrong, I don't know. But if you think about like Twitch or Kick or something like that, a lot of the content on there is totally deplorable, in my view. Like antagonistic, so I don't, if I'm walking around the city, I don't want people to come up and harass me and stuff. I do this after work, it's fun. I do it because I enjoy it. I don't need any issues. That's just my honest opinion. Like if you notice, right, the vast majority of people who join these streams every night, just like normal, cool, chill people, right? Maybe I'm wrong. But every time I see like a a bad news article. It's crazy people on these streaming platforms like Kick and stuff doing just deplorable stuff. So I don't want any part of that. So I think I'll just kick it with you guys here. Maybe there was a Knicks game tonight. Look at everybody coming out of Madison Square Garden. Hey, Theo, what's going on? Thanks for sending me your book, by the way. Feel free to plug it in the chat. But again, I just want to clarify. I'm not saying that everybody on Twitch or on Kick is like that. Obviously, sensible people know there's probably great creators and amazing people, but it's just too high risk for me. Especially with the line of work that I do, we deal with a lot of high profile people and they have like privacy concerns, and I just don't like trouble. I don't like trouble.
He's recording it.
Let's take one spin around Koreatown. We actually haven't been through Koreatown in a long time. Someone says, how has the removal of the congestion pricing worked in New York City? I'm actually confused about that myself because I'm under the impression that it's not removed. And I don't even think the Trump administration has the authority to remove it. I was reading an article in the Financial Times, then I read an article in the Washington Post. It was like conflicting stories. But my conclusion so far is that I think this is a state's issue. I don't think the federal government has the power to abolish it. Now, I'm against congestion pricing. I don't like it, but that's besides the point. It doesn't matter what I think. I just don't think the Trump administration can take it away. I have no idea. So we'll see what happens, but maybe to answer your question, I don't really notice a difference in the traffic. I'm assuming, right, and it's probably, the data probably shows that traffic is way down. But I just don't drive in Manhattan. I don't really drive in the city. I mean, traffic's crazy now, obviously, because you have the Knicks game coming out. Jeez, look at that. This is a quintessential New York City traffic jam here. Brandon says, I'm definitely not a fan of another tax, but I think there needs to be a way to fix the MTA infrastructure. It's got to be paid for somehow. Look, it's a good point. I mean, my thought on the whole thing is money is not an issue, right? Money is actually potentially the issue. There's not a strong correlation between increased spending and increased quality of life and quality of infrastructure. I mean, just look at, the New York City subway, the MTA, and parts of California as an example. I mean, Gavin Newsom in the state of California spent more money on homelessness only to make the problem worse. So money is not the issue. They'll tell you money's the issue, but it's the stewardship of the money, right? It's the efficiency, it's the governance. You have to have good governance, right? Berkshire Hathaway has billions and billions and billions of dollars on the balance sheet. If I became the CEO of Berkshire Hathaway tomorrow, right, and Warren Buffett stepped down, I'd most likely run that company into the ground. It doesn't matter how much money they have on the balance sheet. It's who's at the helm of the company, who is in charge of all this. So there's a lot of fraud, there's a lot of waste, at the MTA, and there is. That's just an undeniable fact. So feeding more money into something that is broken does not fix it, right? Oh, I caught the that ball right as it was about to go into the street. So that's what I would say. I would say the government needs to prove themselves to the people first before we give them any more money, right? Same thing on Wall Street, right? If you're at a hedge fund, or you're putting your money in a hedge fund, and your hedge fund manager consistently loses you money, well, you're not going to continue to stroke checks and give them more money, right? If you've worked in sales and trading, right, or you're a portfolio manager. One of my good buddies, really, really good friends, was one of the top portfolio managers at O'Neill and Company, which is the company William J. O'Neill created, founder of Investors Business Daily. And Bill O'Neill would look at the P&L at the end of the month, and he would allocate more of his personal funds to the portfolio managers who were killing it and ratchet down the exposure or take money away from the PMs who are underperforming, right? It's kind of obvious, right? You want to feed your winners, so to speak. So if you have, like talk basketball, if you have Steph Curry or something shooting threes and he's making a three every single time, well, when you get down the court, who are you going to give the ball to? You're going to give the ball to Steph Curry. You're not just going to pass it to somebody else. You give it to the guy or the girl with the hot hand, so to speak. Stephen F. says, Tom, would you purchase a studio / one-bedroom apartment in Manhattan if you live 2 hours away by flight, just a weekend / vacation spot? What's your opinion? I mean, it depends. If you're looking at it as an investment, probably not, because the property is probably not going to cash flow. But if you've done well in life and you want to enjoy yourself, I'd say go for it. But if you're approaching it as, I want to buy this one bedroom or a studio just to visit New York City on the weekends to have fun, but I need to get out of it in, let's say, 5 to 7 years at a profit, then I'd say don't do it, because it's highly unlikely. But if you want to spot like a pied a terre, we call it, right? If you want a pied a terre, and you got the money to fly in and out of New York City every weekend, do it. Enjoy yourself. You still want to look for a good deal, but I would say it's probably more appropriate for that type of situation. So it depends, right? There's a lot of pied a terre buyers. There's a lot of people who purchase just like a studio, one bedroom, and they're only here maybe 4 weeks out of the year, right? They're called pied a terre buyers. This is looking down towards Koreatown. TD, what's going on? Lance, welcome. Bob Smith. Matthew says, I don't agree with Tom's choice of cars. I know, but Matthew, I got to get you to try out a Tesla. The Tesla Model S is the craziest thing I've ever been in my life. So crazy. I was driving the Tesla Model S this morning, and on the highway you could turn on, it's not full self-driving, I think it's autopilot. So you still need to, pay attention, right? But you could take your hands off the wheel and your feet off the accelerator, and that thing drives itself. That is the craziest. It's literally like being in the future. It's nuts. So, I don't know. I like Teslas. EVs in general. I was with a client today that had a Rivian, and I was in the car, and I will say and agree, I think Rivian's going to give Tesla a run for its money because it is very, very cool car. Like a very, very cool car. And Rivian is backed by Jeff Bezos and Amazon. All right, we're now walking through K-Town. Matthew's like, make a Tesla. That looks like a 69 GTO. Yeah, Jack, the Porsches look very cool too. I just think EVs are far superior. Maybe I'm biased, maybe I'm not, but just the responsiveness from an EV, if you've ever driven one, is unbelievable. Sam says, what's the difference between autopilot and full self-driving? Well, full self-driving, the vehicle will literally drive you to where you need to go. Like, you navigate, it drives you around. Autopilot is, I believe, something you use mostly on like highways. You just press a button on the steering wheel. You still have to kind of keep your hands close to the steering wheel and pay attention. Like the Tesla will send you a notification and say, hey, pay attention. But it will drive itself. It'll maneuver around turns, everything. It is crazy. Maybe what I'll do tomorrow morning when I'm driving home before I head to work, I'll film a video and I'll upload it. And you guys can kind of see the autopilot in action on the Tesla Model S. However, apparently the most impressive full self-driving right now is not by Tesla. It's by Google's Waymo. That was a cool car. I've never driven a Cybertruck though. Hey Nina, this is Tom. Yesterday at dinner, very nice Chinese restaurant, had a robot deliver me the meal. Wow. Now that's futuristic. Now was it one of those like SoftBank robots? Or was it one of those, Nina, it's funny you mentioned that. There's this place just right across the street actually. Or not across the street. I'll walk past it. I'll show you. I think it's called Katin Sushi, K-A-T-I-N, Katin, 30th Street and 5th Avenue. It's a similar setup. So all the sushi's on conveyor belts, but the waiters and waitresses are little robots that it's like a big platform, and it brings you like your drinks. It's very, very interesting. It's very cool. Now they still ask and request for, tip. You got to tip them at the end, but there's not really any people to tip. You're just tipping the robots. So Talk about a very, very high margin business. Now that was really one of the craziest things, like eye-opening experiences about being in Korea when I traveled there a few weeks ago. There's no tipping culture at all. However, the service is unbelievable. It's almost like at times a little awkward how like accommodating the staff is. But yeah, there's no tipping whatsoever in Korea. It's weird because it's almost like habit, right, in the United States. But yeah, if you go out to eat in South Korea, there's no tipping, and if you're at a valet, you throw the guy, $20, whatever. That's like disrespectful over there. Tipping culture here in the US at times has probably gotten a little out of hand, but wow, no way. Kevin, I was out in the middle of Iowa, total corn country, in a small restaurant, and the robot delivered the food. I was shocked. Well, that's the future. There was a good article today in the Financial Times talking about just the amount that Amazon is investing into fully robotic warehouses. I think the largest warehouse, I don't want to misspeak on this, so maybe somebody could type it into ChatGPT. I want to say Arkansas, I don't know. And it's fully, the warehouse, there's no employees. There's like a few employees that watch over the robots, but everything is very, very specialized robots that pick, pack, and ship, do all the logistics. It is super impressive. And Amazon, in order to fulfill their commitments for increased availability for same-day delivery, particularly the Amazon Prime customers, they're investing billions and billions of dollars into those fully autonomous warehouses. Vincent 23 says, I think SoftBank's robot Pepper was a failure. I hope this guy's all right. I don't want to film it, but that guy, I think, took a big fall. So it's funny, I'll tell you a quick story about the Pepper. The SoftBank guys used to come into the office and pitch the Pepper robot to us. And I actually met Moss's son in the office a few times, as well as Adam Newman. Now, the reason why I met Adam Newman is because at the time SoftBank had invested billions of dollars in the WeWork, the kind of like the shared office company. And SoftBank lost a ton of money on WeWork. But here's the funny thing, there's actually a lesson in this. Just because you fail at a business once, doesn't mean that nobody will ever give you money again to fund your idea. And what Adam Newman did, allegedly, was borderline fraud, some of it, right? Allegedly, so I don't get sued. Now, he just raised a ton of money from Mark Andreessen at Andreessen Horowitz for his new startup Flow that I think is headquartered in Fort Lauderdale. So, Adam Newman made billions, kept billions, lost billions for investors, and still managed to raise a bunch of money and launch this new company, this new venture, Flow. So be persistent, right? Stay in the game. Just do things. I think that's the name of the game. Many people are kind of afraid of failing for the obvious reasons, but I think nowadays, in the age of social media and stuff, people are afraid to fail because of what the perception of other people, right? They'll be like, what a terrible businessman or a terrible businesswoman. You have no talent, right? It's the same thing that they do to Trump, whether you like him or hate him, right? Trump's a terrible business guy. What an idiot. He screwed up in Atlantic City, ran all his casinos into the ground. What a failed business guy. Maybe he did fail at a bunch of stuff, right? But if there's one thing that I think we could all agree about President Trump, whether you like him or you hate him, you'd never vote for him, you think he's an asshole, the guy is an absolute machine. Unbelievably resilient. I'm at a loss for words just how the guy just doesn't quit. Whether you like him or you absolutely hate him, whatever. He just doesn't freaking quit. And there's a lot of people like that in the development business here in New York City. One of which, who I was actually just with today, Harry Mackalow, he's one of those people. Harry Mackalow lost billions of dollars, made billions, lost it again. I mean, that guy, and he must be, over 85 years old now, and he's still going. He was at an event tonight, entertaining, pitching One Wall Street. He doesn't stop. He just doesn't stop. And watching that is a huge lesson. Okay, so if you think, you screwed up in life and you made a few mistakes and you're in your 40s, well, this guy, is going at it, pushing 90, just doesn't stop, relentless. So just be relentless. Just be relentless. All right, we're going to head back up towards 42nd Street.
It's worth exploring, and I think we shouldn't shut it down.
And the beauty of America, particularly the investment business, is you really only need to be right once, right, to totally change your life. You only need to get one good job offer, get one good promotion, be at the right place at the right time once, have one good investment payoff. You could have one good investment payoff and lock in those gains, and you could have every other investment that you ever make in your life go to zero, and you still make it. There's a lot of very, very famous investors like that. On a more of a nuanced example, there was actually a movie made from this gentleman. I'm not saying that he's always wrong now, but Michael Burry, right? He was right in a major, major way one time. Made billions of dollars, right? Short the market into the financial crisis. But pretty much missed out on the most powerful bull market in all of human history, right? Missed all the major tech stocks, shorting the market all the way up. But he's still worth multiple billions of dollars because you only got to be right once. You only got to be right once. A lot of these tech CEOs, you hear about their successes, but they've started so many companies that went bust. So many. We're going to cut over to 5th Avenue. This is the Bryant Park Hotel, just off to the right. Roberts is here in Ohio. Vivek is running for governor. Oh, is he really? Oh, yeah, you're right. He is. Now, that whole thing was kind of strange, right? They kind of kicked Vivek to the curb. They kind of gave him the boot from the old Doge, the Department of Government Efficiency. Elliott Wave Review says, Tom, are you more bullish on stocks or real estate over the next 10 years? There's really no way to answer that question because real estate is very, very specific. Do you mean like commercial real estate in New York City, residential real estate in New York City? I mean, what are we talking about here? More like hospitality, high-end stuff? I'd say generally, just in a more broad sense, obviously, 100% U.S. equities, 1,000%. But I will say this, and not to cite the Wall Street Journal article for the 1,000th time, but for those of you who didn't see that article, the top 10% of income earners in America, right, $250,000 plus household income, now make up a record 49% of all consumer spending. So think about like what that means for businesses and what that means for the economy, right? If you take it a step further, if you look at the ultra high net worth individuals, there's more of them than ever before. So I would go very, very big into servicing the very, very high end. And you've actually seen this in stock prices, right? Like hospitality stocks like Hyatt have performed really well. I think a lot of those businesses will do exceptionally well. Maybe even if you want to start your own company, catering to that socioeconomic class, maybe providing a white glove service of some kind, right? Like a private chef business as a service, something like that. Experiences, high level for high income earners. I think that's a very interesting niche for the next 12 years. Very interesting niche, because they don't have any price resistance once you pass a certain amount. Time becomes the most valuable asset. So people are willing to pay up for convenience, right? Extreme convenience is going to win out. Today we just talked about how Amazon is investing billions of dollars into these fully autonomous next generation robotic warehouses. They're doing that so they can stay competitive and offer customers same day delivery, right? So it's not only good enough to get next day delivery anymore, we need it same day. So the future is hyper focused on convenience. Can you get it to me 2 days ago, right? I need it now, but I really needed it 2 days ago. Those will be the businesses that win big, right? Businesses like Uber, things like that. Man, what a beautiful building, right? Incredible. Stephen Schwarzman building here. Empire State Building there. Amazing. You have the two lions. Patience and fortitude. I know, Steve says the Stephen Schwarzman library is amazing inside. It's almost more like a museum than a library. It really is. It's unbelievable in there. You know, that's another really big blessing of just living in New York City, by the way. Right? If you live in even the tri-state area, the amount of resources that we have at our disposal for free is pretty insane, right? Pretty insane. So if you just want to change your life and you just have a good work ethic, right? Let's say, you really don't know what you want to do in life. You're just kind of moping around New York City all day. You're looking for a change. I would wake up every day at 7 a.m. I would take the train into the city. I'd grab a cup of coffee, sit down, drink it in Bryant Park. And then I'd go into the library adjacent the Stephen Schwarzman building. You have nothing better to do all day. They have free copies of the Wall Street Journal, both the print and the digital copies, every day. Same thing with the Financial Times. Every day, nobody uses it. Both print and digital. Same thing with Investors Business Daily. Both print and digital, and probably the most extensive, okay? And I have an unbelievable collection of books in my house. That's like one of my hobbies. I collect very old and rare finance books. The New York Public Library, adjacent from the Stephen Schwarzman building, you can sit in there and give yourself an MBA, right? If you want to study the hedge fund business, if you want to study private credit, if you want to study private equity, LBOs, literally anything, all of the text is there for free for you to consume and read and just hammer on that all day. And if that's not enough, you could just use the free Bloomberg terminals that they have there, which is about a $40,000 piece of software a year that you have access to for free. And if you're not a self-starter, you need everything to be spoon-fed to you, that's fine. If you say, but Tom, I don't know how to use a Bloomberg terminal. Nobody ever taught me. That's okay. They offer free classes at the New York Public Library that nobody goes to that'll teach you how to use the Bloomberg terminals, teach you every function, right? Even teach you how to build, some of the financial models, like a discounted cash flow model, right? Everything is available for everybody for free. So use it, right? That's just a very small example in terms of the finance world. But just the amount of plentiful free resources we have that nobody uses, if you really just want to allocate a year of your life to sit in that library, pick a topic, study it, drill it relentlessly, you're going to be much better off the following year. Unless there's something really, really devastatingly wrong with you, you're going to change your life. You just are. And you don't have to spend any money. You don't have to give anybody a dime. You don't have to buy a course. You don't have to do anything. It's free. Oh, and there's a really interesting section at that library. They have it in like a 3-ring spiral binder. Every single letter that Warren Buffett has ever written is printed out, photocopied, laminated, and is in a 3-ring binder right there. So you don't even need to search or do anything. It's just there. It's free. All right, let's go into Grand Central Station. This is now to the main concourse. arguably one of the most beautiful train stations in the world. Anyway, we'll do a quick recap for those of you who just joined. We kind of did a deep dive into Nvidia's earnings on the live stream today. A pretty good quarter, but there were some weak spots. So Nvidia's revenue rose about 78% to $39 billion on 73% gross margins. So net income, or profitability, they made about $22 billion, which is just insane. Now, as we reviewed, the most kind of sought after piece of information for this earnings report was the sales metrics on Nvidia's new Blackwell chips. And Nvidia's revenue for the Blackwell chips posted about $11 billion. Jensen came on the earnings call and said demand for Blackwell is quote unquote amazing. And he's calling it the fastest product ramp in company history at Nvidia. So in terms of the data center segment of the business, 91% of total sales comes from the data center unit. That includes the Hopper AI chips and now the Blackwell chips. The Blackwell chips will be used to deliver AI software as well. Process called inference, which we briefly spoke about a little bit. One of the revenue segments of the business did decline. That is the gaming section of the business, about $2.5 billion in sales. That was down about 11% year over year. And the fastest growing on a percentage basis segment of Nvidia's business is the car and robotics segment, which brought in about $570 million, up about 103% year over year. And that's really all we got. I'm a little tired. I'm going to go home and go to sleep. I wish you all the best. Thank you for joining. This was a very, very fun and exciting live stream. Thank you all for coming out. Have a wonderful Thursday tomorrow, and I will meet you all back here roughly at 8:30 or 8:45. So Sharon, appreciate it. Professor Dario, thank you. Brandon, thank you very much. Mohammed, appreciate you as always. UniJ23, Hang with Mark Mom, Theo, Mark Summers, Ben, Peter, Brad's Brain, Top Cat, Cruz, Hal T, Nora. See you guys tomorrow. Take care.